Alright, man, we are live from this point of time, and this live streaming happened just because of really wanted to compare two things in the life because the most of the money are just came across in these two things, and if you are master these two things, that means you are going to make just like that a crazy amount of money. If you don't understand that really well, then you are not able to make a great returns just like that. So it is time to rethink about which is the best, and if you understand really well in order to get more and more stuff done and more data that can help you to enhance your learning about real estate versus equity, and end of the day you will take actions against how and which thing is best for me. And if you apply all the things and one by one, then you will make a crazy amount of money from equity as well as real estate. So this is a more likely to focusing on equity and real estate. Let me start. So this is disclaimer over here, you can read. Now, this is a chart which I have taken from the US market, and this shows that from the 1819s to the 2016, the overall return of equity and real estate. This is a very real estate, and very interestingly, it will show the result. And this is a green line which indicate what is the CPI inflation over there. That means if you invest your money, then there is a higher chance that means you will lose your money if you keep your money in your house and in your lockers. That this is the same thing is representing by this green line chart. And when you look at this orange line graph, then it is represent the property prices over the last course of years. And when you look at the blue lines, it represent the equity prices, how much returns it has been generated over the last few years, just because of this has been started at the point of time 100, and they reach almost there, which is you can say 30,000. And the real estate it is almost between a 4,000. And when you take a comparison both of them, then you will see the return on of equity is much higher than, which is almost 7 times higher than the real estate returns. So here the one thing I really wanted to convey here, just because of the return they have generated, equity, it is more than the inflations any real estate and any another thing which is not legal for the people who really want to make a great returns from there. So now this is a chart which shows that if you invest your money 100 over there in 1819, then you will get the same amount of money and the real estate, because the real estate prices and inflation is also at the same level. You are not able to become the rich, and if you really become the rich, then the level of expertise you have get over there, it is huge. And that means the time when you take a long horizon, that means you are going to make crazy money just following that chart. And equity is the one of the best example if you really follow that chart. So now have a look at this chart. This chart actually shows that S&P 500 versus the whole real estate market, and the average real estate market which is began from just like that. The first phase of this real estate market is picking up. It is picking up, and real estate is try to skype up at the moment. Once it is happened, then you have to compare this graph over this graph. This graph is a different cities in a country, and this graph is represent the overall S&P 500, how much return which has been generated just following this graph. And it is happened just because of that. And once this has been failed a lot, and again it's pick up, and the same level of expectancies happen with this real estate market in different cities, you can see over there. And end of the third phase, this has been represented a big graph which is unbearable. you cannot expect how much returns they have been generated from this level to this level, which is, if you compare this, this is almost 4 times returns from their base level. So this is a realistic market, which is the market is try to expand at this point of time in 2010. And same things happen in your equity market. It has been increased very larger as compared to real estate. So this is the thing. Now have a look at this housing price over the last few years in India, and this is a city where the most of the money has been created by the people. And this is a 2010 when you invested your 100 rupees at the point of time. That means you will get end up big money in only Lucknow. And Lucknow is a city where you get a good amount of money just because of you have invested a lot of money over there. And at the same time, when you look at the money expectancies, when you look at the lowest returns over there, which is the city is generated the lowest return in the world, in the India, it's Jaipur and Kanpur, which is the lowest return generated in the last 10 years. So if you really wanted to get to know which is the best sector as compared to real estate, then it is the equity. Just because of you have the liquid money, you can just, if you have a mistake to buy a share, then you can sell immediately. But if you buy a land, and it has become so harder for you to sell a land very fast. So that is the reason I prefer equity as compared to real estate. So have a look at this chart. This chart represents how many CSR is generated in the last 8.5 years. And this is the graph which is representing, this is the table. And in this table you have seen the Kolkata, it has been generated at a larger amount of CAGR over the last years. And this is the Bhopal, and Bhopal is also generated at the second level. And Delhi is also a big region where they have generated a big amount of CAGR at the moment. Now have a look at this graph. This table is also says that when the stock market has been started at the moment, at this time is maybe the correction years is 4 times and 4 years consecutively. And once they happen, it maybe happen at another decades. But when you look at the overall contest, then you will feel that the thing is not be right. The thing is alright, because you have a 4 time odds. That means you are getting this 4 year consecutively a consistent return, but the 1 year is the minus return. At the same time, once you take it consecutively a 3 year a continuously getting return, but 1 year is, that means you have more odds as compared to single negative sign. As compared to this is a continuously generated a high return over there. And this is the same thing happen at the last 15 years. They have generated a good returns as compared to real estate. So here's a chart which is represents something interestingly. And if you are a smart investor about equity and real estate, and you really want to make a crazy amount of money just because of you have know that the one thing, because you are smarter than other people. This is the green line which is represent 15 days of works. That means if you are just neglecting, if you are just not investing your money, keep your money into the stock in 25 days, that means you are going to make a big money. That means the worst case means when the stock is falling more than 10%. This is the time when the stock is falling more than 10%. When it has happened, then your stock will be rise when you take a position according to your risk. And this has happened at this time. Once you miss all the 25 days at the moment you will not get the big returns from here. This is the graph, it's represent this. And when you compare this, the smart investor is withdrawal money at the, when you take it this graph you the smart investors take out all the money at this moment. When 1976 is happened, they already know that in next year next year the recession is gonna be come in this country. That's why this man has been withdraw all their money in 1976, or and the next year the recession is happen just because of they know the something is uninterestingly is gonna be happen. That's why they withdraw all their money at this moment, and the next 3 years is continuously give a big returns. They already know because they are smarter than the other people, and they invest again into the stock market and make a huge return again. So this has happened with that, and if you are a smart investor, you can follow that and make a good returns from there. And this is something which is interestingly, and so this data and represent a good returns. Now have a look at this chart. This chart is represent something interestingly. This graph is represent that if you have invested your money in this moment, that means in just in this 3 years you're going to make only 32% return, which is not good. And at the same time, once you look at this little bit here, once you look at this graph just for adjustment, and then you will going to feel that how much return you can generate by investing daily, by investing in the dip market. Dip market means when the market is dip, that means you have invested your all capital into the market, and the market is giving massive return as compared to here, as compared to you have invested at the peak. And this is represent the same thing by this chart. And this is another chart which is representing a long term horizon of this chart, and this chart represent if you have invested a lot of money out there, that means you have end up making this amount of returns by this. And this is another thing which is making a great amount of money by investing your money into the stock market. And this is my side, and whatever I say, whatever I tell, it's make it happen. I make it happen just because of I did. And this is the chart which represent the 100 beggar, and this chart is represent how the 100 beggar returns has been generated by the people. And if you really invested your money into the stock market more than 35 years and getting consistently 14% returns year on year, then you will end up making 1 lakh rupees into the 1 crore, and that's great. And it can be happened by following the index fund, but for 26% of CAGR, if you really want to get, then you have to invest in the stock directly. And for 20 years, you can make 100 bagger returns by following that. So this is my side about that stock, what you need to do, and you will end up making crazy amount of money by following that.